Welcome to another quick bite video from the Insurance Domain Training Center. Traditional property and casualty insurance has historically relied on static, one-time risk assessments that quickly become outdated as conditions change. Digital twin technology addresses this by creating a virtual replica of a physical asset, such as a factory or power plant, which updates in real time using operational data. Let us dive deep into this to understand what is digital twin technology and how it helps in continuous risk intelligence.
Welcome to this explainer. Today, we are doing something really cool. We're bridging a massive gap between two totally different worlds, traditional property and casualty insurance and cutting-edge tech. Now, whether you're an insurance pro who knows commercial property risk like the back of your hand, but you've never even heard the term digital twin, or maybe you're a technologist who builds these brilliant systems but isn't quite sure how they fit into underwriting, you are exactly in the right place. Today, we're diving into the incredible evolution of continuous risk intelligence. All right, let's just jump right in with a super fundamental question about how we look at property risk today. When an insurer writes coverage for a massive asset, like say a power plant or a giant manufacturing facility, they send a risk engineer out to inspect it today, right? They're looking at fire protection, machinery, safety protocols. But what happens tomorrow? The machines keep running, production shifts, and completely new hazards pop up.
So here's our roadmap for today's explainer. We're going to hit the snapshot problem, introduce the digital twin, check out the software foundations, weigh data versus insight, look at the impact on insurance, and finally, peek into the future of risk intelligence. Okay, starting right off with Section 1, the snapshot problem.
If you're in P&C insurance, you know this scenario all too well. A traditional engineering report is basically just a snapshot in time. You get a completely static picture of a factory on the exact day an engineer visited. But out in the real world, the reality is that the factory is totally dynamic. Equipment ages, parts break, conditions are always changing. If an insurer is only relying on that single snapshot, they might not realize how the risk has morphed until the next inspection. Or, worse, until the roof literally caves in.
So how on earth do we fix this limitation? How do we understand a risk that's constantly evolving? Well, that brings us to Section 2. Enter the digital twin. The absolutely crucial word to zero in on here is living. A digital twin is a virtual representation of a physical asset. Maybe it's a massive warehouse or a fleet of delivery trucks. But listen, this isn't just some static 3D model or a fancy blueprint. It breathes. It changes right alongside the real factory. Information is constantly flowing from the physical asset out in the real world straight into this digital version, updating it continuously. Now, you might be picturing some massive supercomputer sitting in an underwriter's office. Let's clear that up in Section 3, Software Foundations. For the tech folks tuning in, you're probably already nodding along. The backbone here relies on specialized, heavy-duty enterprise software. We're talking industrial-grade platforms from massive players, like Microsoft Azure Digital Twins, Siemens Digital Industry Software, Dassault Systems, PTC ThingWorx, and IBM Maximo. These platforms grab engineering drawings, CAD models, equipment specs, and then they layer all of that with real-time sensor data to build out the virtual representation. Now, insurance professionals, don't worry, you absolutely do not need to know how to code this stuff. But you do need to know that these software powerhouses are what make the magic happen. Which naturally begs the question, especially for our insurance professionals, are you suddenly on the hook for building this crazy complex tech? You can breathe a sigh of relief because the answer is a hard no. These digital twins are almost always built by the factory owners themselves or their manufacturing tech providers or specialized IoT vendors. The insurer's job? Just to consume the incredibly valuable insights it spits out. Think of it kind of like telematics in auto insurance. Your auto insurer doesn't build the GPS tracking device in your car, right? They just use the driving data from it to better understand the risk. All right, moving on to Section 4, data versus insight, and why context is absolutely everything. Now, technologists, I know what you might be thinking. Hey, if we've already got sensors on these machines, why not just pump that raw temperature and pressure data straight to the insurer via an API? Why go through the hassle of building a whole twin? Here's the thing. Having data and actually understanding that data are two totally different ballgames. Picture a massive factory with, say, 500 different machines. If you're just staring at a giant spreadsheet of raw temperature readings, it's just noise. But a digital twin, it gives you the context to see that just 3 of those 500 machines are responsible for churning out the components needed by every single production line in that building. The twin is literally telling the underwriter, hey, if one of these 3 specific machines goes down, the entire factory grinds to a halt. It stops being just a simple property damage issue and becomes a massive multi-million-dollar business interruption exposure. So what does all this context actually mean for the day-to-day grind of an insurance carrier? Let's get into Section 5, Impact on Insurance. Let's walk through a little scenario to see predictive loss prevention in action. Say one of those critical machines normally runs at a certain temperature. Over a few months, the digital twin notices this tiny, gradual spike. The machine hasn't broken down yet, there's no claim filed. But the twin knows from historical data, usually running some machine learning anomaly detection in the background, that this exact temperature curve almost always leads to a total meltdown. So the system fires off an early warning to the factory floor, they run some maintenance, and boom, a colossal business interruption claim is stopped dead in its tracks before it even happens. When you zoom out and look at the whole ecosystem, shifting from a static view to dynamic intelligence is a total game changer for everyone involved. Underwriters get this crystal clear view of critical dependencies so they can price accurately. Risk engineers can monitor hazards 24/7 and figure out exactly which locations actually need an in-person visit today. Claims teams, they can use the twin's historical data to accurately reconstruct what happened right before a loss, which completely eliminates the guesswork. And the policyholders get to reduce their equipment failures and keep their operations running smoothly. It's literally a win-win across the board. Of course, with all this talk of machine learning, automation, and predictive AI, we absolutely have to address the elephant in the room. Does this technology replace human risk engineers and underwriters? The simple answer? No, not at all. Digital twin technology is an enhancement, not a replacement. You're always going to need human expertise to interpret the really complex scenarios, build client relationships, and actually negotiate the terms. The digital twin just feeds them way better information, making the human underwriter and engineer more essential, and honestly more effective than ever before. They aren't guessing based on a dusty PDF from last year anymore. They are armed with continuous living intelligence. Finally, let's pull back and look at the really big picture in Section 6, the future of risk intelligence. We are quite literally witnessing a monumental evolution in this industry. Historically, insurance has been super reactive, right? You assess the risk up front, you wait around, and then you pay out the claims after the damage is already done. But the future, thanks to bidirectional data and digital twins, is proactive. It's all about predicting the risk, preventing the loss before things go sideways, and continuously monitoring those exposures. There's this fantastic quote that really hits the nail on the head. Digital twin technology helps insurers move from understanding what a risk looked like yesterday to understanding what it looks like today and what it may look like tomorrow. I mean, that perfectly bridges the gap between the static past and this dynamic, predictive future we're heading toward. When you break the whole thing down to a simple equation, the value becomes just completely undeniable. A traditional survey equals periodic understanding, but a digital twin, that equals continuous understanding plus prediction plus loss prevention. By baking IoT sensors, cloud computing, and predictive analytics right into the underwriting workflow, we're turning this overwhelming mountain of raw data into actionable context that actually protects businesses and stabilizes portfolios. I want to leave you with one final thought to chew on as we wrap up today's explainer. If a living digital model has the power to flag a failing piece of machinery and completely prevent tomorrow's massive multi-million-dollar claim, can insurers really afford to keep relying on yesterday's snapshot? Thank you so much for joining me today. I really hope this sparks some ideas about the incredible collision of property insurance and digital twin tech. Keep learning, keep evolving, and I'll catch you next time.
Thank you for watching the Quick Bite series from www.insurtech.com. Please like and subscribe to our videos for you to get notification when we upload new videos.